Joining us now, Max Levchin, founder and CEO of Affirm. Max, it's great to have you back on the program. Welcome.
Thank you for having me.
Let's start right there. What are you seeing in terms of spending behaviors from the consumer? What does it mean for Affirm?
You know, I've said it before, I feel like I'm a broken record at this point, but every time I'm asked this question, I say, the rumors of the demise of the American consumer are greatly exaggerated. We're seeing good demand. We just reported over a month ago now, I guess, our prior quarter, and the strength was apparent. The growth was really, really good, high 30s year over year in spending, and all the other metrics even better. So nothing too dark to report. I think, obviously the macroeconomic news concerns people for all the right reasons. And so the conversations with man and woman on the street reflect that. But in terms of their shopping patterns, their borrowing, and their ability to pay us back, it's all been very strong.
What are your thoughts on this move by FICO to have scores begin reflecting buy now, pay later data? Is that good or is that bad?
I think it's very good. I think the TransUnion published a study a little while ago that showed that of the folks that have not tried buy now, pay later services, a meaningful percentage have not done so because they feel that it doesn't reflect their repayment history and doesn't help them build their credit history, their credit score. We have been reporting majority of our transactions to the credit bureaus since 2017. So, nearly a decade of accurately reflecting repayment history of our customers, and vast majority of them are repaying us on time every time. And so there's this giant body of data that is out there saying, hey, these folks are not overextending, they're not overspending, they're not foolishly applying for these loans, they're really being responsible adults. The fact that it's going to start being reflected in their credit score, and FICO is the preeminent sort of lingua franca of scores out there, is really important. I love when people choose Affirm instead of credit cards, but their FICO score is important when they borrow for a car or apply for a rental apartment. And so the fact that the score is going to reflect their usage of Affirm and being responsible in their payment back is just all kinds of good news for them. If I'm allowed, I'll call on the rest of the industry to participate in this, because I think it's not just Affirm out there that's providing these services. We want everyone to start reporting.
Max, we can often forget about the checkout aspect of Affirm's business, which I imagine gives you a very interesting, granular look into consumer behavior. So what are you seeing there in the mix of services versus goods, and how consumers are treating particularly big ticket items right now in this economy?
Again, just from my perch, and some of the headlines out there will make you think twice about that, but we are seeing a real shift from revolving credit into pay over time, responsible payment. Big ticket items, obviously, if you have a sense of macroeconomic uncertainty, you think twice before you pull the trigger on an expensive bicycle or a couch or a service. All of those things are fantastic use cases for what we offer. We're seeing great demand in sort of, things that I've never talked about on air for sure. Things like elective medical services are now a real component of our volume, which is not something we saw, maybe even anticipated a few years ago. But now, I happened to be in a dermatologist's office the other day, of all places in Hawaii, and saw my own logo prominently displayed, and got a great conversation with a couple of receptionists who told me how much they love the service and how helpful it is to folks that come in and have to pay for these relatively expensive procedures. And so we're seeing services become a component of buy now, pay later industry. But overall, the demand, the shift from revolving credit to Affirm is really strong.
I imagine seeing that brightened up your complexion immediately. What should we expect to see happen with near prime as we get into the back half of the year, with consumers generally stretched with their credit, but with you having this model where I think you expect to take some business and attention away from traditional credit cards?
That's exactly right. So we expect to continued strength. We're very optimistic about entering the second half of the year, beginning of our fiscal year, so it happens. And it's entirely because the message of being responsible in your borrowing, deciding that there is a fixed time window, start now, paid off by January 1, or whatever the right timeline for you, has given people the confidence and a sense of control that they crave. And so as they go into back to school sales and Christmas shopping, if I'm allowed to mention this, is so far away, they are starting to apportion their money because they're not entirely certain how the year's going to play out for them. Knowing when they're out of debt is a great way to sleep better at night. And so we see that every year, and I don't think it's going to be any different.